In the world of luxury watches, a quiet tension is brewing. While some brands are showing signs of recovery, others seem to be caught in a downward spiral. The question on everyone's mind, is this the calm before another storm? And what does it mean for collectors and enthusiasts? Let's dive into the latest trends shaping the pre-owned watch market, where prices have been fluctuating in unexpected ways. To set the stage, July 2025 brought a modest uptick in the watch chart's overall market index, with a slight gain of plus 0.2%. Leading the pack was Patek Philippe, which saw an impressive rise of plus 1.5%, while Rolex managed a more subdued increase of plus 0.2%. Over the past 6 months, these two giants have shown gradual improvement, with Patek Philippe climbing plus 2.7% and Rolex up by plus 2.0%. But here's where it gets controversial. Audemars Piguet continues to struggle, posting a decline of minus 0.6% in July and a worrying minus 1.6% over the last half year. The numbers tell a deeper story when we zoom out to a year-long view. Audemars Piguet prices have plummeted by negative 4.8% across tracked references, and the trend shows no signs of reversing. Meanwhile, Rolex has fallen by negative 1.2% compared to last year, but Patek Philippe is bucking the trend with a modest annual growth of plus 0.8%. So why are some brands thriving while others falter? A closer look at brand performance. Patek Philippe has emerged as a beacon of hope in an otherwise uncertain market. In July, the brand's collections delivered standout performances, particularly the Aquanaut and Nautilus lines. The Aquanaut collection surged by plus 1.7%, driven by models like the green dial 5168G, the black dial 5167A, and the steel 5164A. Similarly, the iconic Nautilus line gained plus 1.3%, thanks to the enduring popularity of pieces such as the white dial 5711, the blue dial 57261A, and the versatile 57121A. One factor contributing to this upward momentum could be Patek Philippe's strategic decision to phase out certain steel models. For instance, the discontinuation of the beloved 57121A earlier this year has created a sense of scarcity, empowering dealers to command higher prices on the secondary market. This dynamic might explain why sports watches from the brand are experiencing a resurgence in value. On the flip side, Audemars Piguet finds itself mired in challenges. Despite its iconic status, the brand's prices have continued to slide, with the Royal Oak being the only collection showing relative resilience, a loss of just minus 3% year-over-year. Other collections, including the Royal Oak Offshore, Code 1159, Jules Audemars, and Millenary, have fared far worse, each dropping more than 9% annually. This raises an important question. Is AP simply lagging behind in recovery? Or is there something fundamentally flawed about its strategy? Some argue that the brand's heavy reliance on the Royal Oak leaves it vulnerable to shifts in consumer preferences. What do you think? Is AP too dependent on one collection? And then there's Vacheron Constantin, which unfortunately takes the crown as the weakest performer among the Holy Trinity. In July, the brand's prices fell by negative 0.8%, marking yet another month of underperformance. Over the past 6 months, the Vacheron Constantin market index has dropped by negative 5.1%, and the yearly decline stands at a staggering 11.3%. Every single collection tracked, Overseas, Historiques, Traditionnel, Patrimony, and 56, has seen losses exceeding negative 10% in the past year. It seems clear that Vacheron Constantin needs a bold move to regain its footing. Could innovation or rebranding efforts turn things around? Or is the brand destined to remain overshadowed by its peers? #The bigger picture. Stability versus all uncertainty. While the data from July offers glimmers of optimism, the broader outlook remains mixed. On one hand, Rolex and Patek Philippe are demonstrating sustained stability and even growth, suggesting that portions of the market are stabilizing after the turbulence of recent years. On the other hand, brands like Audemars Piguet and Vacheron Constantin continue to face headwinds, raising concerns about their long-term trajectories. Adding another layer of complexity are external factors beyond the industry's control. As of August 7, 2025, the U.S. government has imposed a hefty 39% tariff on Swiss imports under the reciprocal tariffs policy. If negotiations fail to yield relief, this could deal a significant blow to the Swiss watch industry. Retail prices may climb further, potentially alienating price-sensitive buyers and driving them toward the secondary market. However, this influx of demand could thin out existing supplies, creating new pricing pressures down the line. So what lies ahead for the luxury watch market? Will Patek Philippe maintain its upward trajectory, or will external forces disrupt its momentum? Can Audemars Piguet and Vacheron Constantin find their footing again, or are they destined to lag behind? These are big questions with no easy answers. One thing is certain: the coming weeks will be pivotal as Switzerland navigates these challenging waters. We'd love to hear your thoughts. Do you believe the current trends reflect a temporary blip or signal deeper changes in the industry? Share your opinions in the comments below. Let's spark a conversation.